And welcome back to another episode of the Climb Finance Show. I'm your host, Kean Lynch. Hope everyone's doing well today. Today we're going to have a short, brief episode about interest rates in the United States and its effect on the stock market. I'm going to look through a couple of articles very quickly, breeze through them, highlighting the important points. And then we're going to watch a short clip by Jim Cramer in which he discusses the opportunity in the market, essentially the few select number of stocks that can do well in this type of high interest rate environment. So let's get started because there is no time to waste here. First off, we have the 10-year Treasury yield hitting 4.8%, yielding 4.8%, a 16-year high. We have this great article on CNBC by Jeff Cox, Sophie Kinderlin, and Hak-Young Kim. Breezing through this, the 10-year Treasury yield, which serves as a benchmark for mortgage rates as an investor confidence barometer on Tuesday, surged to its highest level since 2007. So what that means essentially is that investors are worried and mortgage rates are at their highest levels since 2007. The 30-year Treasury yield is 4.9, the highest since 2007. And we can take a look at this chart here, the last 30 years showing a steep decline over the previous 30 and now a very sharp incline from about less than 1% on the 10-year Treasury to almost 5% in less than 4 years. So what does this exactly mean for the stock market? Well, today, as rates spiked to their highest in since 2007, the Dow Jones dropped big time as interest rates spike. Stocks tumbled on Tuesday as Treasury yields hit their highest levels since 2007, raising concerns higher interest rates would freeze the housing market and tip the economy into a recession. The Dow Jones was down, the S&P was down, the NASDAQ was down as well. The worst day since March for the Dow Jones. The Dow is now red for the year 2023. Meanwhile, the S&P is still up 10%. The benchmark yield has surged the past months as the Fed has pledged to keep interest rates high. Check out one of my latest videos where we talk about the Fed and what they told us, reading between the lines during their last actions. And meanwhile, the average rate on a 30-year fixed mortgage neared 8%. And here they're saying seasonal weakness is normal, but they're saying that this could send us into a recession. So what does Jim Cramer have to say about this?
Companies that are so flush, what, Cole?
Exactly. Where is the opportunity? What companies can provide some gains here?
Did just fine, even when the Dow rolled over. It's the companies that are so flush, I call them nation states Fed, aka the Magnificent Seven. It's Apple, it's Amazon, it's Alphabet, it's Meta, it's Nvidia, it's Microsoft, and it's Tesla. These are companies, with the possible exception of Tesla at some point in its own car cycle, that only need their own money, and boy, do they ever have it. They are actually coining a fortune with their considerable cash flows. That's right, they're making money on their deposits. It's funny, we used to look at their gigantic cash positions and their cash management attempts to try to bring in a little extra income. It's just a kind of waste of time and abstraction. Now they're huge winners, and I think you'll begin to see a line item in their quarters, the money they make off their cash, that could finally offset some of their miserable losses from that darn strong dollar.
Okay, thank you, Jim. To finalize what we've kind of talked about today, Jim Cramer saying the Magnificent Seven stocks, Apple, Alphabet, Amazon, Microsoft, Meta, Nvidia, and Tesla all have saved so much cash on their balance sheet that they don't need to borrow funds in the near future. Conversely, they can deposit their money for 5% at least per year and earn quite the sum of additional cash on top of what they already have. He says they have so much money, they are essentially nation states, and they are the only companies that are able to withstand the high interest rate environment that we are currently in. So that's all for this episode of the Climb Finance Show. Thank you for tuning in, and I hope you have a great day, week, month, and rest of this year. Like, comment, subscribe. Let me know if you have any questions or ideas for potential topics. Thank you.